The primary reason more investors are turning to farmland as an investment opportunity is that it has a long history of producing solid returns. Over the last 50 years, the value of American farmland has risen by about 6% annually, with only 5 down years during that period. Add in the cash rent yields, and the return to investors has been even more impressive. Since 1990, farmland has produced a positive return every year, generating an average annual return of 11%. Owning farmland provides investors with several other benefits. Farmland returns have historically had less volatility than most other asset classes. Farmland returns typically do not move in the same direction as the stock market. In many years, farmland has produced a positive return in years that other stock has lost value. Farmland is a real asset that produces commodities like corn and grain. It benefits from inflation since that would boost not only acreage values but also crop income. Because of that, farmland is considered to be a gold-like investment with a yield. Farmland has been growing as an asset class for investors in recent years, as new ways to invest in the sector have emerged. The most obvious way to invest in farmland is to buy land directly. Purchase usable land and rent it out to a farmer. With this method of investing in farming, the cost is high since an investor would likely need to purchase a large plot of land. Acquiring land that is not currently used for agriculture and converting it to cropland, pastureland, or an urban farm. A farmland conversion has the potential to produce the highest return since an investor would likely be able to purchase land for a lower price and, therefore, could earn a higher cash yield and potentially benefit from high land value appreciation. However, this option requires the most work since an investor would need to transform the land to farm use and find the right crops and tenants for the location. Purchasing an existing farm via a sale-leaseback transaction, where the current farmer continues to work the farm and pay rent to the new owner. A sale-leaseback transaction would likely be the least risky and most passive way of directly investing in farmland. However, in exchange, an investor might need to pay a higher price for the land and therefore earn a lower cash yield. Buying an existing farm or agricultural land and leasing it to a new tenant. This option could potentially generate a higher return for an investor. However, it would likely require more work up front to find the right tenant for the farm. Purchase shares of specialty rights focused on farmland. Any investor with a brokerage account and enough money to buy one share can invest in farmland rights, making them the most accessible and lowest cost way to invest in farmland. However, because they trade on stock exchanges, they do have some market risk. Several companies have formed in recent years to provide access to farmland investments using the internet. However, most of these farmland crowdfunding platforms are only open to accredited investors. Please subscribe to my channel and click the bell to get alerts when a new video is posted. You are welcome to write your comments, questions, or concerns you would like to share.
Yes, please.